Hello everyone, this is Beyond here and welcome to another edition of the Technical Market Update. Okay, what we're taking a look at is the Australian dollar versus the US dollar. And we can see that the market is testing support near the 87 level. Now let me draw a line here to represent the area of support. And this market is currently testing this support area, and the support is holding so far. This is the daily chart of the Australian dollar. Now, the market could indeed go below this area of support, but now the market just seems to be, the bulls are defending this area pretty well. Now, what we have to look to see is if this market enters a triangle in a downtrend. This is a 4-hour chart, and we can draw a trend line. That's a trend line, and this base could be the base of the triangle. This is not confirmed yet, but this is what could play out. The confirmation would be if the market comes up to this trend line and is rejected at the trend line. So this is just projecting in the future. The market has to come up and respect the trend line and head back down for this triangular consolidation pattern to be confirmed. And I believe one of the reasons why the Australian dollar is seeing some strength at support is because gold bounced off of pretty critical support also. This is a weekly chart of gold, and what we see here is that the market is bouncing off of the support point at just above 1180, and that point was defended pretty well last week. So that could be the reason why the Australian dollar is exhibiting some strength currently. So we just have to wait and see. Now this market, the gold market, could definitely turn around and break below the support. And if it does break support, that will be very bearish for gold, and we could see a pretty strong decline down to the 1000 level or even the 950 level over the long term. So we'll keep an eye out on that. Taking a look at the euro, we see last week the market did find support at 125, but also was resisted at the 128 level. Now the 128 level marked critical support previously. This is a daily chart of the euro. We could see that this area, this 128 level, was critical support in the market. 1, 2, 3, tested this area 3 times. Then it broke down in September and came back up and tested this area of past support. Because remember, in technical analysis, past support can turn into future resistance, and this is exactly what happened here in the euro. So for the day traders out there, this was a pretty good trade on the 15-minute chart, because you knew that the market, you knew that there was a high probability that the market will turn around at the previous area of support, now turned resistance. Okay, taking a look at the Canadian dollar versus the US dollar, we see that the market is flirting with the previous high that was made in all the way back in March. The market didn't quite come up to the high. It traded just below the high. Okay, let me just bring up my cursor window here so I can see the exact price. Okay, we saw that the high was 112.78, and the high here that was made in early October was 112.70. So it's off by about 8 pips. So the market is flirting with these highs, and we just have to wait to see if the market is able to punch above this particular high. Now, critical support in the Canadian dollar is down at the previous lows here. Just draw the line. These lows just below the 111 level should act as pretty good support in the Canadian dollar. And if you look carefully, you could see that this could be a head and shoulders top forming. But a head and shoulders top is not confirmed until the market breaks the neckline, which is here. So we have to see if the market breaks down below the neckline or it continues up. So that will be, you'll be in a wait and see mode here for the Canadian dollar. Okay, taking a brief look at the S&P 500. Let me just take a look at the index and not the ETF. Okay, the S&P 500 index, it came up, made a new high in, this is a daily chart of the S&P 500, made a new high in mid-September and has collapsed down. Now, critical support in this market is down at the 1900 level. So if the market breaks below 1900, we could see either of two things happen. The market could decline pretty rapidly, or it may break down and retest this area of support and even come up into this area, and then it would be a matter to see if a new high can be made. But that is out into the future. What we need to look at is to see if this 1900 level is breached. If it is breached, it could spell some trouble for the broader stock market, and we have to keep an eye out for that. Before I leave, let me just point out what happened or what's happening in the US dollar index. We saw that the market was in a broad triangle that extended all the way back to the year 2005. That was the beginning, and the market really over the last 7 years have been in this consolidation pattern. This triangle was confirmed in 2010. You can see the base, and what happened is that the market closed above this triangular consolidation pattern. Now, it's interesting to see if the market holds the breakout point, because the rule is that if it breaks out, the market will come and test the breakout point again and then continue to rally. So it will be interesting to see if the market holds this breakout or collapses back into the triangle and heads downward. So we are watching the dollar very closely and the dollar index very closely to see what happens, whether this is confirmed as a true breakout or the market settles back into the triangle. Okay, this is Beyond. I hope you enjoyed this video presentation and have a good trading week.